Hi, this is Randy Finney with Right Side of the Chart, and this is a mid-session update for Friday, October 8th, 2021. What I'll be doing is starting out with an update on the broad markets. Definitely want to point some what's going on in QQQ and also treasury bonds as well as corporate and junk bonds. So I'm not going to spend a lot of time on those, but they are related. So I want to show you some developments that I'm monitoring and what it may mean for the equity markets, even if you don't trade bonds. Then I definitely want to do an update on the metals. Some nice movement today there. And anything else, it won't be long, maybe just an update on lumber because it has continued to move, broke out of the levels that I was mentioning yesterday. All right, starting out here with the broad markets, this is a 60-minute chart of QQQ where I've been most focused lately, and we're going to zoom in nice and tight. Okay, so this is where we're at. We had this little minor downtrend line that was recently taken out, and then pointed out once that happened, the likely target would be this gap right here. That's the gap from, what is that? Looks like the 28th right there. 28th. Right there, that gap down. And so I had a little box here. What I like to do on gaps, I'll often look at the candles and just put a little box on the bottom and top. But the actual gap, when you gap down, technically the gap is at the open. And on that candle right there, you can see my pop-up box on the left on Tuesday, September 28th, shows that QQQ opened at 365.36. So that's where I put this yellow line, and that is technically the gap. So it would be on the body of that candle that shows the fat part, top of it, and that's pretty much what we hit. So I often talk about, there's two significant levels in a gap, the top and the bottom. When you're testing a gap from below, both of those act as resistance. If you enter the gap by a fair margin, there's a good chance you're going to backfill it. And again, some traders will watch the top of the candle, some will watch the actual gap. Either way, close, split the difference. That's pretty much what we hit, and we reversed. Okay, not the end of the world. So far, a minor pullback, but we did so far stop at gap resistance. So, the bulls are still, again, when I say the bulls, I'm speaking metaphorically to the bullish case, to a run at new highs and beyond, a continuation of the uptrend, an assumption that the correction is over. That's going to take, first of all, they're going to have to take out the trend line right there. And if they do, certainly a check mark. And then above that, you also have the top of the gap right there. And again, they take that out. That's just another check mark. If they don't, then, what you want to look at now, you have a gap right here from the other day. See, there's today's gap, actually, yesterday's gap, I'm sorry, and now that has been close to being backfilled. We entered that gap, we're well within it now, and so maybe, on the bullish case, maybe the market just wants to backfill that gap and resume up, but anything much more than that is going to be pretty bearish. If it breaks the bottom of the gap, then look for a back test to that trend line, and if the buyers don't step in there, then obviously that's going to increase the chance that there is going to be another leg down to hit that third target on QQQ, which remains here at about 343. So it's still leaning that way. Again, you can't get crazy bearish yet with the primary trend still being bullish, but that's the way I'm leaning now. Let me show you something else that may, and again, whether we go straight, I'm drawing the arrow straight down. The squiggles can still look like this. That's what I had before. We could anywhere along those lines and still hit T3 and still keep this near-term downtrend intact. As of now, strip away all the lines. That's what you have. If you is a current near-term downtrend right there. Lower highs and lower lows. This is yet to be seen within a larger term uptrend. Also keep in mind we had in addition to rejection at the bottom of that gap, another near perfect rejection on the 61.8 Fibonacci retracement level. It's right here. It's this yellow line that I mentioned, and again, that is a retracement of this most recent leg down, 61.8, just like we had back there. A perfect 61.8% Fibonacci retracement from this initial leg down. That was the 61.8 Fib retracement. Another leg down, 61.8 retracement, which is well within the normal realm of a counter trend bounce. So, like I said, the case can still be made that this market's going to take another leg down, and if we start to move a lot higher, and we take out the next fib, 78.6, we take out the gap and everything else I just covered in that last chart, then it increases the odds. Doesn't guarantee, but it just increases the odds for another run at the previous highs. And this market has a pretty clear history of once it corrects after putting in high, it usually makes a marginal new high and then has another pullback correction. And that's how it's been stair-stepping higher. But again, I'm looking and factoring in what's going on the daily and weekly charts, and hence that's why I think this time will be different. I already did a pretty good job of calling down that biggest correction in months, almost to the penny to my second target, which initially was my final near-term target. I just, based on, again, what's gone on the weekly and daily charts, that's why I've added that third additional target there. All right, so that's it. I'm not even going to go to SPY. Right now, we could do it, but I'm focused on QQQ, and to keep this video short, let's roll into the Treasury bonds. All right, okay, now why that might affect the market. Typically, but not always, treasuries move inversely to the stock market. They are considered a flight to safety asset. There's two things that are going to cause interest rates to go up, and when rates go up, bond prices go down. That is a one-to-one direct inverse correlation. That doesn't change. I talk about correlations between the US dollar and gold, which can be on and off, things like that. This one is absolute. There's no variation in that, so just keep that in mind. Interest rates up, treasury bond prices down, and vice versa. Okay, so now what causes interest rates to go up? Two things: future economic growth expectations, or inflation. They kind of go hand in hand. Or a reduction in flight to safety. In other words, rates will start rising after a correction or sell-off when there's been a rush into treasuries for a flight to safety bid. Another way to say it is interest rates drop when there's a flight to safety bid. When institutional investors and sometimes individuals you want to seek safety, you're going to get out of the market or hedge up, they will buy treasury bonds. And by buying bonds, that makes the price of bonds go up and rates go down. So what you're looking at here is the 30-year bond ETF, TLT, 20 to 30-year long bonds. And you had a recent breakdown here. You had first you had an uptrend line break right there. And we traded around for a while, and we had this trading range. And we recently broke out. We bear flagged right there. There was an impulsive move down. TLT bear flagged, and what I wanted to point out is that flag has almost run its course. We're close enough. There might be a little more downside. I have the resistance, first good resistance here at about, support, not resistance, support, at about 140.69, pretty decent level. And again, that flag, it hasn't played out to the full measured target, which would be somewhere down there, a little bit lower. But I want to say we're coming up on some pretty good support. And what does that mean? Well, probably get a bounce in treasuries. They're getting close to being oversold. And if that happens, again, what do you usually see happen when TLT is going up? That is quite often, again, a flight to safety bid. Institutional investors moving money, buying treasury bonds, and quite often in anticipation or concurrent with a correction in the stock market. So not always. The other reason that you're going to see bonds go up and rates fall is an abatement in the inflation and future growth expectations in the economy. Again, so if if all of a sudden Fed says something or does something that convinces the markets they're going to, long inflation. And don't be confused with short-term rates. In other words, you could see the Federal Reserve come out and do a surprise rate hike or start talking a little more hawkish than expected. That's going to raise short-term rates. That's what the Fed primarily controls, or they directly control. And by raising short-term rates, it could actually and should actually cause long-term rates to fall, because they're trying to spear off or head off inflation by cooling the economy down by raising short-term rates. So don't, just keep that in mind. If the Fed were to be more aggressive than expected on hiking or even talking about hiking short-term rates, that could cause long-term rates to fall. So I just want to point out these variables because those are the two big ones that affect treasuries. And most importantly, the fact that we're coming up on support and we're likely to bounce. Now that's TLT. That's the if you want to short treasury bonds, you can buy TBT. I think this was pointed out recently. We had a bullish falling wedge pattern there with positive divergence in place, and there was a breakout. So and there's that flagging action. TBT is the 2 times short variation or inverse of that TLT we just looked at. So you'd buy this to short treasuries, and you can see the flag as far as a measured target still has a little bit more to go. So again, there may be a little more downside first, and so what I'm talking about right now could happen soon. Maybe we reverse. Sometimes you reverse a little shy before those flags play out. If not, keep an eye on that, and that would most likely coincide if we start to move down, in treasury bonds. We reverse. I mean, TBT goes down, TLT goes up. That would quite likely coincide with another leg down in the stock market, and that's what I was trying to get at here. So we'll watch this, where there's really nice resistance or potential target if you're currently long TBT. Again, I wouldn't chase it here because what I just showed you on TLT coming up on support. And we also have corporate bonds, investment grade corporate bonds coming up on support. This is LQD. So these are your investment grade corporate bonds. Many of those have the same, some of those, quite a few have the same rating the U.S. government does. So these are your higher quality bonds, all investment grade rated. And you can see here, this one, like everything, like most bonds, broke support. Trendline support, then broke the price support, has been running down, but look, we have pretty good support. I've had a support zone here. These lines were here for a long time. I created this one back in June, early June, June 3rd. This one was put here back on February of 2021, and because it goes back a ways. That's my point here. This is a pretty significant level. Translation. The odds are starting to increase for a bounce in bonds. So if we get this, usually LQD and the high investment grade corporates and treasuries will usually trade in sync of one another again because they're impacted most by interest rates, whereas your junk bonds, JNK and HYG, those are more impacted by market conditions, what's going on in the stock market and in the economy, less so by rates. And they just recently broke down there. So, and coming off a pretty big divergent high. So that's JNK. HYG is just another fun company, their junk bond ETF. So far holding up relatively well, but something to keep an eye on. And then also IEF. This is really, long bond is a little more volatile, but IEF, a lot of traders will track this, and it has a lot of implications on the economy. There's a trend line I added, but it's coming up right now. It just hit support. I have this line here, 114.53. That one was also created back in February of 2019, that support level, and we just hit it. So what I had there, this I was trying to show you, there was an uptrend line off the lows. This was a divergent low bullish. I mentioned treasury bonds as being bullish back here on that breakout. We had a nice uptrend. Everything came full circle. We went from a bullish falling wedge with a breakout and back test and a rally afterwards to a bearish rising wedge right here and a breakdown and a downtrend. So it's swing trading, watch, rinse, repeat, catch these swings. And at this point in time, there was our sell signal, our bearish rising wedge, our breakdown, and I would say that that pattern has more than met its, technical projection for sure. There we are at support. That's the bottom line on the 10-year. We're also oversold right there with some divergence. We have equal lows in the RSI, only RSI divergence, but it is there. And so again, it's setting up the potential for a bounce. You can trade bond futures, you can trade these directly, or you can just factor it in that what would cause treasuries to bounce. Certainly if we get another leg down in the stock market to my third target. So I'm just trying to say that this aligns with that scenario. This likely bounce here in treasuries aligns with a likely another leg down in the stock market. One more here, MUB, just to show you. This is the iShares S&P National Municipal Bond ETF. So it's a good proxy for how the muni bond market throughout, the country is doing. There's state-specific muni bond funds, California, whatever your state is, if you have income tax. And then there's these national ones here. And it just shows you we've been in this big trading range, and we're coming up on the bottom. We're coming up to support soon on MUB. Big support level, so that's one to watch as well. Okay, and with that being said, I'll move on. I don't have super strong convictions that bonds are going to bounce right here, like I showed you. Some are, I have some coming up to support, some looking like we could get a little more downside. So at least we're getting close to a bounce level. And again, something to watch, especially if bonds start to rally and rates start to drop soon. That may be give us a little heads up to what's going to go on the stock market. But for as of now, the easy money today at least was in the precious metals. I gave you an update this morning, and we'll start out here with gold. This one has just been nice. I moved over to this 120-minute chart. The chart I've been showing you in recent videos had 60-minute candles, but it was getting compressed. We're only looking at just this area here, so I wanted to zoom out a little bit and clean it up as well. That's not what I intended to do right there. Let me go back to the gold chart. Somehow it hit the wrong button here. There we go. All right, so that's it. Gold, GC. We can zoom in a little bit just to look at the levels. What I wanted to do, one thing, is clean it up and give you guys some more clean targets because that 60-minute chart had a lot of resistance levels in between. And so this morning I got that post out to you right here. Said the odds were very good. I thought they were very good for a pullback for the reasons I stated and I'm about to get to now. I'll show you the currencies a little more. I made mention to them. I didn't put the charts in there because I wanted to get the videos out to you guys. I mean, that post out to you right away so you'd have time to reverse if you wanted to. And nice reversal it was. So, if you have been long gold either on the divergent low and or the breakout or the back test or plenty of opportunities, that was that first target today, about 1781. And from there, I'm going to have to put the line up there. We pulled back. We're right here all the way down to 1758. And that's a 1.5% give back. So this is active trading. And that's why I fired that post off. This is where you could have, on gold futures or gold, GLD, or any of them, taken profits and recycled back in. That's actually what I did. I'm back in now. I wasn't looking for much of a pullback, just a quick reaction off that level. And I do think we'll continue on up. So far, like, the action, we're stair-stepping higher. I don't have a hard support level, but I think this is a good area to re-enter for a swing up to that next target, about 1809, and then still maintaining this near-term swing target, 1830, roughly 1838. And ultimately, if that gets taken out, I'll probably get a reaction. If we get there, then that would be longer-term bullish for gold. So as of now, we'll just take this one step at a time, and I'll try to post these little squiggles when I think there's opportunities to exit to book some profits. And again, maybe you don't short. I reversed it there. I had silver, gold, platinum. You can reverse and short, or sidestep and then buy back in if you don't short. Just sell your longs, or look, ride it out. These are the little minor squiggles. Sometimes I talk about them, and I know most people don't have the time or the inclination to game all these little micro trends, I'll call them, pullbacks. And so I think it still looks good. And if you bought gold here, anywhere in between, you can have your stops commensurate wherever your entry was. And we'll move on. Let's go look at silver and the rest, and I'll wrap the video up. Let's see, SI, here we go. Silver, this is also a 120-minute chart, 2-hour candles, as shown up here if I don't ever make mention. There's our primary downtrend line, still a near term and the next target, but we had this 23055 as my first target here. We had a little bullish falling wedge right here. We had a divergent low, and silver popped, hit it today, and same thing, just like gold, had a nice pullback of about better than 2%, almost 2.5%, at least 2% pullback off the high. So again, same story, and that's the little line I drew with the squiggles in that post this morning. It's nice support. I think that's a good level to recycle back in if you reverse there or took profits or reversed and shorted. Go back long. We could certainly pull back more. Let's say we do. See this $22? That was support. It still is support. You could get a nice little inverse head and shoulders pattern here, and this would be your left shoulder right here, your head, we could get a right shoulder, and we could have a neckline right there. And inverse head and shoulders are bottoming patterns, so that would be a potential thing there. So you really, you want your stop somewhere there, at least, not too far below that low. I will say if they take it out, you're still going to have divergence. So it all depends on your time frame, your trading style. Are you a swing trader, trend trader, long-term investor? If you're a long-term investor, you got to give silver some room. If you're an active trader, very short term, then you ran it up to here, you took profits, you recycled back into there, and we'll go here and probably get a reaction there, do the same thing, and so forth and so on. Next up, PL, Platinum Futures. The ETF for this one is PPLT. Just a beautiful setup here. You had that little downtrend line, breakout back test, bullish falling wedge, divergence right there, divergent low, impulsive leg up right into the downtrend line, pull back, hit it, consolidated on it, broke out, back tested real if you zoom in real tight, and then boom, nice thrust up. It was up over 5% this morning. This one's actually it's had a reaction. I define a reaction as a bounce or pullback. And on a long trade, when you have a reaction and it pulls back to support, you bounce or a consolidation. And so this is a reaction. We hit that level and we've been trading on it all day. So that's consolidation and not much of a pullback on platinum so far, which shows a lot of strength. The sellers stepped in at that level, but they're not overwhelming. The buyers are certainly stepping in and holding this one up. And so that's good as long as it holds up there. Now look, we could still have another leg down. That's just today so far. There's our primary trend line. We can come here and back test. If we do, I will say it now, that would be an objective entry as well right there. Otherwise, if the metals can regroup here, and I'll show you what will probably cause this, what would be the catalyst for this in just a second when I get to the currencies. That's my next target, 1084, 40-ish. Remember, actual resistance levels, you want to set price target sell limit just below if you're planning that, because if everybody's looking at 108.41, and I'll say this, that's not a hard level. Yeah, I had a hard time with that line. That's where I think we'll get a reaction around there, and then you can see some additional targets. Or you get a trade and it looks like a nice bottom. Here's another way to look at it. If this active trading thing is spinning your head, that's a nice divergent low. That's a very nice trend line breakout, and that to me indicates more upside to come. So if you don't want to try to game all the squiggles, I think we can work our way back up here at about 1145 in platinum, which is still a nice lift. Palladium, PA, last one, and then I'll move on to the currencies. ETF for this is PALL. Same thing, divergent low. First of all, it was a short right here. I mentioned, I'm longer term bearish on this, but near term bullish. So you mentioned it in the 831 video as a short. And then I came in here on around here, September 20th, whenever that was, mentioned you might want to cover that short, go long because I expect them to bounce, give you these targets, first target zone, second, and a potential third target. We'll see. We may get up there. We broke out here, hit the first target, pulled back, put in an even bigger divergent low. We just extended the positive divergences, consolidated under this 1917 level for a while. Boom, pulsive breakout, back test. There was another objective long here, here on the back test, and then boom, another thrust up. So we hit that first target zone, the top of the first target zone again, and just like platinum, this one's hanging in there. It's more of a consolidation intraday so far since we hit it this morning. And so if we can get some more upside in the precious metals, that should shoot us up here to my next target at 2270, and then potentially up here we'll see how things go, how the charts look, maybe all the way up there at about 2595. And now last but not least, regarding the precious metals, we look at the currencies. Let's start with the almighty dollar, DX, US dollar futures. You can chart Euro USD if you don't have dollar futures. I like this chart. That's it. We've been building divergences for a while. Equal highs on the RSI, lower highs on the PPO, And as I mentioned this morning, and that's one reason, certainly a big reason why I expected a reaction off those levels, is you can see the U.S. dollar was and still is just above trendline support. So we need to break this. If and when that happens, and I suspect it will based on the posture here, whether we bounce first again or not, we break that, that should bring us down to the dollar and probably all the way down here to that 91.79 target. We've already hit it a couple times with those smaller divergent highs. So this is what you want to see. And this would help confirm either breakouts or the likelihood that those levels I just covered on all the four major precious metals, that they will break out above today's highs, which are resistance levels, and that would be a breakout of this downtrend line, break below this downtrend line. And also you could trade the dollar as a pure play trade, or you can trade euro or watch euro. This is E7 euro futures. I have a minor downtrend line right here, the one I just drew. Gives us this nice bullish falling wedge pattern. This is a 60-minute chart. I think that's what we were on the US dollar a minute ago. So pop that, and I will say you haven't, that other trend line may come into play, may or may not. But if you can take out both of them, that should open the door for a move. I don't see really much stopping this. There is a reaction high right there along the way, but I think we could get a pretty good move up here at about that 116.88 level on the euro. And again, remember that euro up equals gold and silver and all those other dollar sensitive metals will also usually rise. And if and when we take that level out, probably get a reaction first, head on up there. Next target would be about 117.9. Okay, and as mentioned, lumber broke out. There's that resistance level. It was also a target way back here. I mean, it's a target basically already hit early on. We had that bullish falling wedge breakout. There was an objective long entry. There was another breakout right there, another objective long entry. Pop, hit that target, and we've been walking up the trend line right here. Boom, 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 boom. And recently we just broke this out. Like I said, my convictions aren't super strong as to how much more it has, but it is in an uptrend. And all I can tell you, as long as something's in an uptrend, it's objective to buy pullbacks to support unless those support levels start to go. That would be first the trend line and then 595. I'm just not sure if we're going to have follow through on this breakout. So far we don't, and there is a previous reaction high over here to contend with. And then there's what's going on in the market, and we'll have to wait and see how if we're going to get that other leg down. But as of now, I'm still leaning that way for the reasons I stated earlier in the video. All right, we'll wrap it up here so this one doesn't go too long. Let me get it out to you guys. So that's it. Precious metals really on my focus right now. Equity markets, watching that, and we'll wait and see. There's a little work to be done on both the bearish or the bullish case, and I laid out which levels will increase the odds of either a next leg down to my final targets in the market, or which levels, if taken out, will increase the odds that we're going to go on to new highs in this market and resume the uptrend. This has been Randy Finney with Right Side of the Chart. Have a great weekend.